I'm finding it increasingly difficult to start these conversations about the Hong Kong economy, in particular the retail outlook, right? Is there any hope of a recovery, given that we know the downside pressures started well before the pandemic took place?
Well, good morning, Heidi. Obviously, it is not going to be too good in the next 6 months, mainly because the third wave of the pandemic has just started. And as we all know, today is the first day that we're not going to have any lunches at outside, so at any restaurant. So basically, I think this is all going to be a very bad timing that we are going to see, unless we're going to be able to see the pandemic will be over within the next 2 months. So my prediction will be around 20% drop in the whole year, and the rebound will probably take place in the last quarter, starting from November.
What would we need to see to start getting some of that revenue stream in? Would it really be for mainland arrivals to come in, particularly when it comes to the hardest hit or the hard hit luxury sector in Hong Kong?
Well, yes, very much so. I definitely think once the border is open, most of the mainland tourists will come back to Hong Kong. I think last year we had a very bad time because of the social unrest. This year, I don't think the social unrest would continue. But once the pandemic is over and the border is open, I'm sure the tourists come back, in particular the mainland one, and then we will be able to see a better recovery, in particular on the luxury side, as you just mentioned. But overall, I think luxury is still going to be very bad from a global perspective. But China is going to be the first country to recover from the luxury market.
In the meantime, when it comes to Hong Kong, are you expecting more shops to close down?
Well, I think you have already seen a lot of international brands has already left Hong Kong for the time being. Luckily, these are not luxury retail, but most of them more of the mid-range apparel or different kinds of brands that they are leaving. But at least they are closing down or trying to close down some of the so-called hotspot so that they can lower their cost, in particular on the rent. So you will see a lot of moving around, in particular on like some spot like Causeway Bay that you have already seen a lot of luxury brands that already left there.
Michael, just hold on a second, because we're getting the latest coronavirus numbers out of China. The mainland reporting 105 new coronavirus cases. We had heard earlier that Liaoning province was reporting 5 new cases, not to mention that Beijing reported 1 new case as well. This coming at a time when we continue to see this worst flare-up in China since March, when we saw 80,000 plus infections. Again, another number above 100 for China, 105 new coronavirus cases. So, Michael, as we continue to see this resurgence of virus infections across China, what does this mean for retail in the mainland? We had already seen this shift and this new positioning by retailers to the new retail with digitalization taking place.
Well, definitely, I think this is going to be the trend. Although you just mentioned the new numbers in China, I think it's still the least number of most of the so-called bigger places that have recovered, and they're actually recovering at the fastest pace. So, in fact, I've already seen a lot of Chinese clients, in fact, have not a bad business over the last 2 months. In particular, some of the bigger malls in some of the bigger cities like Guangzhou, Shanghai, and Beijing, that we saw almost like the same level of business as compared to last year. So China is definitely the place to recover first. So I've already talked to some of my luxury clients that they are actually seeing China as the first place they should engage more in going forward. And obviously, as you just mentioned, the e-commerce side would be the best strategy for them to go forward in order to get more sales going forward.
So with that pivot, you would expect less investment and probably more withdrawals when it comes to the bricks and mortar side of things. We've already seen some pretty big, flagship names in commercial real estate either breaking their leases or not renewing their leases in Hong Kong, particularly as we get the uncertainty of the legal situation there as well.
Well, Hong Kong is definitely not going to be able to see back the so-called the bright days, because I think if we look at the last 10 years, we had such a good time in the early 5 years, but then because of the extreme good days over those 5 years, the rent has actually increased significantly. So the cost of running any store in Hong Kong has been so high that the brand owners really think that they should reshuffle their strategy. So going forward, I would definitely not able to see Hong Kong be as good as before, but hopefully we still at the financial center of Asia, then business will still be very much so in Hong Kong, and then tourists will still come back to Hong Kong, and we still have a very tax-free city that we are cheaper than the other countries.